So you want to get into investing? Well, I'm going to go ahead and talk about a few investment loans that you go ahead and do, and start with that BRRRR method. Hey guys, what's going on? My name is Omar, broker and CEO of Alden Mortgage and Ome Realty. So a lot of people, whenever they're going into investing, you go into YouTube, especially people that are not investment savvy, or they're not licensed in real estate or licensed in lending. You really are kind of scouring the whole YouTube thing. Now, this actually came up because of the conversation I had with one of my friends. He was like, "Hey Omar, what do you think about this BRRRR method?" And I'm like, well, that makes very, very sense. Now, if you are not familiar with the BRRRR method, the BRRRR method is going to be buy, repair, rent, refinance. Now, there's two types of people that are out there when it comes to the BRRRR method. It's a very simple, proven way to go ahead and get into the real estate game. Now, before we get started into the lending part of it, let me make sure that you know the BRRRR method is not gonna make you rich. It is not gonna make you rich right away. This is a long hold. Or it could be a short hold depending on how the market's gone. I mean, hell, this market in the past 2 years, you could have totally have just bought, repaired whatever you had to do. You didn't have to even rent or refinance. You could just go ahead and sell it right out the gate if you wanted to. Now, if you are holding, then yes, you're gonna go ahead and follow the BRRRR method to the T. You're gonna go ahead and you're gonna buy, you're gonna go ahead and repair, you're gonna go ahead and rent it, and then you're gonna, after you put in all your money, then you're gonna go ahead and refinance it. Now, the whole gist of it is to go ahead and get your capital investment back so you could go ahead and get yourself another door. Now, there is a couple of ways that you could go ahead and starting out your business, okay? Now, the first part of it is you could go ahead and do the lowest cost one that you could possibly do. Now, I highly encourage you to go ahead and find something with multiple units, whether it's a duplex or it's a triplex or a fourplex, whatever it is, one that you could go ahead and live in, because this is gonna be what's called zero down payment. So you don't need any money down, and it's gonna go ahead and be an FHA loan. So it has to be within the FHA guidelines. I'll put a link in the description below so you can find your county limits to whatever county that you live in. Then we're gonna go ahead and piggyback it, which is called a down payment assistance. Now, a down payment assistance is not, we're not just giving you money. It's not like, hey, here you go, this is for you. You're gonna have to pay for it. This is gonna cost you. It is gonna be a little higher rate, but it's usually a really, really small amount. So it's like, it doesn't really, pennies on the dollar, it doesn't even make sense, or it doesn't even hurt you, because you're gonna go ahead and refinance it out anyway, because you are actually looking what is gonna be the ARV. The ARV is just your after repair value. So if you ever hear ARV, that just means, I'm buying it, this is gonna be pre-ARV, it's like, $300,000. ARV is gonna be at $380 after my $30,000 investment. So you are gonna be in the green 50 grand, right? Now we have to do 80% loan to value on that, blah, blah, blah. We'll go into that in another video, but for this video, we're just gonna stick with this. So now you have what's called your ARV, right? You wanna go ahead and see exactly how much you're gonna go ahead and be able to pull out afterwards. So to get back to it, we have your zero down options. Now, if you are VA, USDA is like rural area loans, or you have your FHA. Now, the FHA is the one that has a down payment assistance. VA doesn't actually have down payment assistance. You could just go ahead and do it, kit and caboodle, right out the gate. Now, you do have to be a veteran, and it's a veteran loan. I'm one too. Thank you for your service. And then you have your USDA ones. Your USDA also requires 0% down. Now, there are other costs associated with, like, let's say your FHAs or US. You have mortgage insurance and PMI and all this stuff. Now, in your world, in the BRRRR method, when you're an investor, these are actually called your initial running costs. Now, your initial running costs are also going to be your taxes, your insurance. These are things that you're going to have to calculate, and how long it's going to go ahead and take you until you go ahead and flip that guy. So the first one is going to be, well, this is going to be it, and then we're going to go ahead and refinance it. We're going to be good to go. I'm going to pull out the cash, and I'm going to go ahead and do it again, and then you do it again, and then you do it again, and you do it again, as much as we possibly can, until we have enough capital to where we could go into the conventional side, and then just put the 20% down, a little bit of money on the backpack to go ahead and fix it up, and then just keep doing it over and over. Because even though you're putting 20% down, it's not really 20% down if you're looking at the ARV. the ARV is going to be your big guy, right? You want to be like way above there, so that initial amount that you put in, you could go ahead and take it out and go do it. Now, the whole name of the game, as far as being an investor in real estate, is the amount that you could go ahead and acquire. It's not going to be a wham bam, thank you ma'am, let me go ahead and see, I got 1 door, 2 door, I got a 4-plex. You're not really making any money off of it, because after your mortgage, your taxes, your insurance, and all this is all paid for, you might be walking away with a couple of $100 out of your pocket. Now that comes into what's called the cap rate. You want to go ahead and see what your cap rate is. You want to take your losses. And even though somebody says, hey, this is what the cap rate is, don't listen to them. Horseshit. Just don't listen to them. You have to do your own math. You have to do exactly what you want to do. Ask for their returns. Ask for their ledger on the rentals. You have to ask for a lot of stuff when it comes to it. I'll make another video on that. I'm just going to stick to the lending part of it. I know I kind of tend to get sidetracked from time to time, and I apologize, but I get so passionate about this stuff. Sorry, my bad. Okay. But anyways, so you have, those are the 3 options when it comes to no money down whatsoever. Then of course you have your conventional side. Your conventional side, this will go ahead and get you money. Now on the conventional side, there are 2 ways you could go ahead and do this, right? You have what's called the self-employed, or you're a W-2. Now this is how we basically calculate it. Now if it is a 4-plex, then we have what's called a 75 to 25. Now the 25% of rent total income, so this is based off of how much income that property is producing. We don't count the whole 100%. Okay, do not count the whole 100%. We only count 75% of it, because we take a 25% of it and we allocate it to rent loss and then turnover and then those weird things that you have to calculate. It's not weird, okay? By all means, it's not weird. This is just something that a lot of people don't think about. You have to think about rent loss, especially because of this eviction moratorium thing. You know how many people have just lost, and attorneys are involved, and a bunch of people are involved, and these emergency relief funds aren't helping them out. Jerks. Whatever. But then after you get the ball rolling, then there's this loan that's called the debt. You have something that's called a DSCR, which is called the debt service covered ratio. Now this is a loan product that is mainly for, rentals. There are other ones, but these are the ones that we kind of go to. This does require 20% down. This does go purely based off of rental income. Now, as you get the ball rolling, you are going to go into the DSCR realm. You are going to find out that interest only is a really awesome thing. You really want to stick to the interest only up to 40 years. If you do need assistance with any of those, link in the description below. Just saying. This is not a promise to lend. This is informational purposes. But I can help you out on this. But in the initial process, right, these are going to be your 0 downs that you go ahead and do just to get the ball rolling. If you do like an SFR or a townhome or something that is attached, a PUD or something like that, just remember that if we are going down the rental path, there is a 1-year waiting period before you go ahead and rent it out. Yeah, it's a 1 year. It's a 1 year. But when you're at the DSCR, you don't really have to worry about that. But that's the way that you're going to go ahead and start, getting yourself into the game. But yeah, so as far as getting in for almost the least amount down, and remember, the name of the game in this BRRRR method is units. We're going to go ahead and call myself Omar Units Ayub here, because units are the things that you need. You need to get as many doors, because as much as you think that one property is going to be enough, and you're like, I want to get into this game, I want to do this, and I'm going to go ahead and be this real estate mogul and this and that, the chances are is that most people, for some reason, they look at their balance sheet and they're like, oh my God, I owe how much money? Don't get scared. It's just numbers. It's just numbers. This is the way to get yourself started. And then once you do, once you start accumulating enough units, because here's a hypothetical, right? You have a fourplex. You have a fourplex, you're living in one of them, you have 3 other units. 2 of those people decide that they don't want to rent. They don't want to pay rent. They're like, you know what? I don't want to rent anymore. I am not paying you any rent. I'm just going to go ahead and say it. And if you're in California, trying to get people out is a pain in the ass. You trying to get anybody out, it's like, I forget about it. I don't even want to talk about it because it's a sensitive subject for me right now, and makes me upset just thinking about it. But you know, that's gonna hurt you. It's gonna hurt you so much. It's gonna just your bottom line is just gonna be completely, and you're like just garbage, and you're gonna just be hemorrhaging money out of your own hard-earned money. You're like, what did I even do? I'm done with this. I'll forget about it. So as soon as you do acquire one, remember, start looking for another one. Start looking for another one. Start looking for another one. Meantime, you're cashing out. You're cashing out. You're cashing out. So, BRRRR method. Those are your 3 loans that you could go ahead and do. If you could go ahead and get approved for them, then when you get onto the other side, DSCR. I'm going to do another video that's going to go ahead and go in depth with DSCR. I'll go ahead and put a link somewhere around here on FHA, 0% down, our down payment assistance program that we have. But hopefully this video helped you out. Hopefully I become your mortgage broker friend. You need a mortgage broker friend. Don't worry about the real estate agents. The real estate agents are, you know, you need to know where the money is coming from. That's all you do. Real estate agents all the time send us listings like, hey, listen, I have this one and I have that one. I have a buyer for, do you have anybody in the line for this one? Because we're the guys who pre-approve everybody, and then we send it on. We have the great relationships with realtors and real estate agents and real estate brokers. So just make sure you get yourself a really good mortgage broker friend, because then we get to go ahead and shoot out, be like, listen, I got this guy and I need this and I do this, and then they'll go ahead and send us a bunch of stuff, because there's something that's called pocket listings that a lot of people hold. For some, whatever reason, most people don't want to go ahead and let people know that they have a house for sale or whatever it is. They wanted to keep it private. And we get to know what those listings are. Like, for instance, I sent out mailers for, I think it's like 1,200 and something different real estate agents. So one click of a button and I get 1,200 responses. Well, I don't get 1,200 responses. I could send out to 1,200 people, and if anybody picks it up, anybody have any pocket listings, I have an investor, locked, loaded, ready to go. They know what's up, and they'll go ahead and get the ball rolling for you. And hopefully you find yourself a mortgage broker friend. If you don't have one, I am always looking for other little friends to go ahead and build a little business with. And maybe we could even eventually work together. That's the whole name of the game, working together with other people. Or if I don't, hopefully I'll see you at the next convention. Till next video, guys. And if you like this content, please like, subscribe, comment, all the other stuff. If I missed anything, please go ahead and let me know. If you'd like me to talk about anything else, also let me know. I'll be more than happy to go ahead and go over anything that you'd like. Till next video, guys. Thank you for watching. Peace.